Hi everyone. Today, we're going to talk about how you can improve your credit score. Whether you're looking to buy a home, get a car loan, or just want better interest rates, having a good credit score is crucial. A credit score is a numerical representation of your creditworthiness, used by lenders to assess the risk of lending to you. Improving your credit score involves adopting responsible financial habits and making strategic adjustments to how you manage credit. While you may not see a dramatic increase overnight, these steps can help you boost your score more quickly than usual. 1. Dispute inaccuracies. Obtain your credit reports from relevant credit bureaus and check for errors. Errors on your credit report can drag down your score. If you find inaccuracies, such as incorrect personal information or late payments that you know were on time, file a dispute with the relevant bureau. And you can provide any supporting documentation to facilitate the correction. 2. Pay bills on time. Paying your bills on time is the most important factor in your credit score. Set up automatic payments or reminders to ensure you never miss a payment. Consistent, on-time payments will positively impact your score. 3. Reduce credit utilization. One of the most impactful factors on your credit score is your credit utilization ratio, which is the amount of revolving credit you're using compared to your total credit limit. To improve this ratio, you can focus on reducing the balances on your credit cards and try to keep your credit utilization below 30%. If possible, request a higher credit limit from your card issuer, which can instantly improve your utilization ratio as long as your spending does not increase. 4. Understanding credit inquiries. When it comes to your credit history, there are two types of inquiries: hard inquiries and soft inquiries. Soft inquiries typically occur in the following scenarios: when you check your own credit report, when you give a potential employer permission to review your credit, when financial institutions with which you already do business check your credit, when credit card companies check your credit file to decide if they want to send you pre-approved credit offers. Importantly, soft inquiries do not affect your credit score. Hard inquiries, on the other hand, can impact your credit score negatively for a period ranging from a few months up to 2 years. Examples of hard inquiries include applying for a new credit card, mortgage or an auto loan, or any other credit form. While an occasional hard inquiry is unlikely to have a significant impact, numerous hard inquiries within a short time frame can damage your credit score. Lenders might interpret this as a sign that you are experiencing financial difficulties and, therefore, pose a higher risk. Another effective strategy is to become an authorized user on someone else's credit account. Ideally, find a friend or relative with a long-standing account, a perfect payment history, and a low credit utilization rate. The primary account holder does not need to give you the physical card. Simply being added as an authorized user can positively impact your credit score by benefiting from the good credit behavior. 6. Keep old accounts open and address delinquencies. The longer you've had your credit accounts, the better it is for your credit score. Older accounts reflect positively on your credit history. Keep them open. Don't close old credit accounts, even if you're not using them. Closing these accounts can reduce your available credit and increase your credit utilization ratio, potentially lowering your score. The next strategy is managing your delinquent accounts. Catch up on past due payments and create a plan to make future payments on time. This will help improve your payment history moving forward. 7. Consider consolidating your debts. By taking out a debt consolidation loan from a bank or credit union, you can pay off multiple debts and have just one monthly payment. If you secure a lower interest rate on the consolidation loan, you can pay down your debt faster and improve your credit utilization ratio, which can boost your credit score. Another option is to use a balance transfer credit card to pay off multiple credit card balances. 8. Use credit monitoring to track your progress. Credit monitoring services allow you to easily track changes in your credit score over time. These services often provide updates on your credit report, such as new accounts or paid-off balances. By using credit monitoring services, you can stay informed about your credit status and take prompt action against potential identity theft, all while tracking your progress towards better credit health. Your credit score is a crucial indicator of your financial well-being. It quickly shows lenders how responsibly you manage credit. A higher score not only makes it easier to get approved for loans or credit lines, but also qualifies you for the best interest rates available. So improving your credit score takes time and discipline, but by following these steps, you can achieve a better score and access better financial opportunities.